morning everybody, it's Christopher from Serene Education speaking. I'm just going to go over the four majors this morning for the 1st of July on our CTC strategy template, starting with the Euro. We had another good day yesterday as the second part of the austerity plan was approved by the Greek government, the 5-year plan, and so we saw a slight pull, a move to the upside and a slight pullback during the Asian market, the US session. The Asian market trading, and we've seen it pull back even further, and then as we go into the European session open, we've seen price move further to the upside and is now testing the prior highs of yesterday's candle as we speak. So ideally, as things are moving at the moment now, you can see the CTCs are well extended in our favor on the daily time frame, and our next port of call would likely be the 1470 mark. Just be aware though that we have this intermediate downtrend and we are in play with it as we speak. It's important because we had a lower swing. We are now testing this intermediate downtrend, so keep an eye on that. Just thinking to see if there's any news out today. We've only got 10 AM GMT this morning. We've got unemployment rates in the Euro, so it could be interesting to see if there are any other factors out there. But as we're seeing now, CTC is extended. Just be aware of this intermediate trend on the daily time frame, just to give you a heads up. If we can break and trade higher than that going into the US session this afternoon, then we're obviously going to see further extensions to the upside. We'll have a look at our intraday time frames. You can see on an hourly, for example, the consolidation yesterday before and after the news. However, we are trading above a previous breakout area, and we've seen higher highs roughly around the 4600 mark, and as you can tell, the swing is to the upside. Trend direction is moving beautifully to the upside on this, and you can see the 50-period moving average acting as a clear support for this pair. As I mentioned, on a daily you can see that price is testing the previous highs that we saw yesterday. I'd like to see a trade higher than that at roughly the 1450, what's that, the 1453, 50 going 5400 mark. Break higher than that will definitely signal further strength to the upside. Notice, however, that the highs are slightly stagnating. You can see the price is testing those highs as we speak by the fake outs. So if you want to take those wicks into consideration, just be aware that we do have an area of squeeze now. As price is moving up, we can see the highs are getting lower as we're making our way to the upside, so keep that in mind. We could be in for a bit of a squeeze today. You can see price is definitely being squeezed between as the highs are getting higher. However, the price action is moving sideways, so keep that in mind. We might see a bit of consolidation today. Next up is sterling against US dollar. Let's look at the daily. Here again you can see price has pulled back. We saw price testing the underside of a previous swing or support area, and we had an indecision candle yesterday. Cable yesterday intraday was a really bad, shocking trading there. There was a lot of movement, don't get me wrong, but a lot of volatility, and you can see very indecisive. However, this indecisiveness has taken it and it's closed above the 200-period moving average, and we're going into the Asian market. So we saw a slight pullback during the Asian session, but as of this morning we've seen a pullback, and we've seen it not trading below the 200-period moving average, which is good because it's indicating further upside movement. However, just be aware of the lower swings. You can see that price is testing this intermediate trend that you had from our high here that we saw when we saw this price action starting to fall. You can see prices trading in that area. So ideally, we've got resistance on this area here coming down, the intermediate trend, but we've also got resistance in terms of this previous support area. So we would like it to obviously close higher than this intermediate trend, because then it'll cancel this trend, but it also needs to close higher than this previous support area, which could be resistance. If it fails to do both, then what we're going to see is consolidation and then a further downside move to come after that. So be aware of that. This support area over here is going to be the open the close of this candle here at 16112, so 1200. If you look at our intraday, if I just look at the hourly, for example, so look at 161200. There we go. So that's a level that needs to be trading above in order to still be, well, to be classified as bullish, and still trading below that is still classified as being bearish. Notice we've got lower swings going into this, and as long as we have the lower swings dictating, then we obviously going to see price coming into play with that as soon as later, and you can see we're doing that exactly as we're heading towards this major support and resistance level. So cable's still got to do a lot of work in order to, it's done the first part at the moment now by finding more and more support above the institutional moving average. You can see the all the moving averages are collecting or coinciding with each other at this area. However, in hourly, we want to see price trading above 1200 to confirm further movement upside. Until such time as that's happening, then we are in a consolidation range to the upside. So rather wait and see if we get a clear indication of a break and close higher than 1200, especially on an hourly time frame or higher, which will bode well because then you can see the momentum creeping forward. All those trading 30 minutes and 50 minutes candles, look, there are opportunities on these time frames to make some easy profits. However, with the CTC being a lagging indicator, you got to be able to read charts a lot more sensitively and quickly to give you those entry levels. You could even look at a 5-minute entry, 15 or 30, to give you those indications of price action movement, so you can capitalize on those 20 pips or more ranges. All those are looking at longer time frames. Ideally, we want to see close above 1200 to give us that indication of the bullishness is still there long term. On to US dollar Swiss franc. Let's have a look at the daily. US dollar gaining a bit of strength yesterday, and we know it's an extended downtrend. You can see that just pulling out. You can see the moving averages. Price is very much in an extended downtrend, and recently the actual trend has got even stronger to the downside. So I'm just going to put that one in so you guys can see it. Price is heading towards those levels as we speak. We saw the US dollar finding a lot of support over a week here in the early parts of June, and I mentioned that we need to see a bullish engulfing candle, which we got yesterday, and you can actually act on that this morning if you choose to. We see in price, and our next target would possibly be the intermediate the major downtrend in this case, if not closer to the 850 mark for this pair. So intraday, look at 850 as possible target area. You notice on the 4-hour, for example, you look at the 850, it's taking us to roughly where the 200 period moving average is as we speak on a 4-hour time frame. Notice, however, we have the CTC red, blue arrow, blue bars, but the CTC still is negative. Just confirming this is just a consolidation on this time frame. If you go down to our smaller time frames, you can see price broke out very, very rapidly yesterday. The US dollar gained a lot of strength because of the news that the euro got its passed its austerity plan bailout, and the Greeks approved it, which meant that any safe haven currencies, including the Swiss franc, which is known as one, actually took a bit of a hammering yesterday as people started pulling their shorting those against the euro and purchasing other currencies instead of the safe haven currency. And sure enough, we saw a huge spike up yesterday after the news, and we're trading higher on that. So expect us to keep rallying, but just keep in mind that the 8850 is possibly a target area. Price has been moving sideways, and you can see that we had a long wick yesterday at the 8435 mark. So we were higher, and then we saw the pullback, and that pullback was in relation, if you look at where price 50% and bounced higher. Ideally, we want to be trading higher than this here. So if price can stay above 84.35, then great. If it fails to, you can see that we have a uptrend here on the 30-minute chart. So if you want to put that in, so price has got to be to stay above the 84.15 mark if possible to see any further upside movement for this pair to at least the 84.50 mark, we mentioned previously. Last pair of the day is the US dollar against Japanese yen. Let's have a look at the daily time frame. You can see that price has been edging up to the upside after the 80 being a strong support area for this pair. However, you can see over the past couple of days we've seen price revert to the downside. Again, CTC is still extended. We had blue and the blue candles, however the CTC is still negative, confirming that the CTC is not matching up, which means that there's no trade long. And until we get all three or all four going in our favor, then we'll look at possibles, but that's not the case. You can see that price action, as we can see, bar the breakout or the fake out, you can notice that we're still seeing lower highs as price has been in this consolidation range. We're not really interested in this breakout. This was the intervention, so which doesn't come into effect. However, notice the highs over a number more touches coming to play, and you can see prices failing yet again to trade to those highs, confirming the further downside movement. It's not able to trade higher than the 50-period moving average as well as a 20-period intermediate, and you can see that there's more momentum at the underside of the wick, the lower end of the wick, after 2 consecutive days of down movement. However, those 2 consecutive days we saw price, even though they were down, price was still trading at the upper end of the wick. So we're getting a lot of indecision here as we go lower. Notice we have higher swings, and if you put that in just to give you an intermediate trend, you can see prices trading on that now. So it's going to be interesting here. If we do see price closing lower, then definitely the 80 mark will definitely be on. However, if we see price trading above this again during the course of today, because remember this is a daily candle, it still has to close. Price action at the bottom of the candle so far, you might see it revert to the upside during the course of the US session this afternoon. If it closes higher, then what we could be seeing is a potential bounce at the upside. It's important to obviously wait. If you're trading on daily, then you've got to wait for this candle to close to give you a definite indication of where price is likely to go to. If not, then intraday we could see price move to the upside on this bounce. If failure to do so, then obviously we're looking for price to move down. It's got to trade higher than the 20-period moving average and close higher than the 20-period moving average going into the end of play this session. So if we look at where the 20-period moving average is, we'll just call it the 80.70 mark. So price has got to be trading above 80.70 intraday. There we go. If I look at an hourly chart, that's where it is. So still trading above the institutional moving average on an hourly. Notice the higher swings from price, but got to get above 80.70. Failure to trade above 80.70 will mean that there's still negativity in this, and we should be looking for opportunities to the downside. If it is trading above the 80.70 and closes higher, which you had previously, then let's look to see if we can look for further gains to the upside. And this one over here, you wouldn't have been entered into this trade if you're taken off the high on the hourly chart, so that didn't really pan out as well. Look for another opportunity, because the moment it goes blue, it goes above here, and then look to gain entry on the upside. And you could look at potentially the previous high here at 81.15 or 20 as your target for the to the upside. So got to trade above 80.70 if you look bullish. Failure to do so, and a failure to break above 80.70 and a close below 80.55 would definitely confirm further downside movement to the previous strong support at the 80 mark, which is way down there. So keep that in mind. Hope you have a fantastic trading day today. Hope you have a brilliant weekend with family and friends. If you had a brilliant week, then great. A lot of news was out this whole austerity plan thing. Did ruffle some feathers this week, but it's all been approved for now. This may lead to seeing euro and its currencies moving to the upside. Just factor in that we're going to see a lot more. This is not the end of it all. There's going to be a lot more measures in place, and we might start seeing other factors coming through on euro that might affect price movement. So be aware of it. But I'll see you again on Monday. Hope you have a fantastic weekend and trade serenely.